What's up, Discord? What's up, YouTube? I did a 30-minute GameStop video. I think I'm going to delete it. I'm going to redo it. I'm going to talk fast. I'm going to try to get my ideas in on this video. I'm going to cover the Keith Gill live stream speculation. I'm going to cover some things about options, Robinhood, after hours trading, and, and also the people holding from 4 years ago that are still holding. So first, I'll start with the Keith Gill. The speculation from me was that he's maybe going to become a board member of GameStop. When you own 10% of a company, you get a board seat. That's you just get one. He owned 5. If he exercises, or even if he doesn't exercise, he should have the capital to buy at least 7 to 10% of GameStop. If the stock falls, he cannot buy 10% anymore where the stock is, and his options would only put him to like 6.8%. I'm sure maybe they might come up with something or some way to get him a board seat regardless, because they probably want him on the board because he seems to have so much influence with the stock and the company as is. That was my speculation. People are all saying, "Oh, he's gonna execute his trades live on stream." No, he's not. He said he was going to talk about stock manipulation and price manipulation, basically the things he's being accused of a second time, because he was in 2020. They put him in front of Congress. Because he's not a regular person, guys. Everyone thinks he's a regular person. I thought that too. He is. He has certifications. He is a financial advisor slash. He worked at brokers. When he was working at the broker, he was front running GameStop. So they think he might have had privy or access to things that most people or others shouldn't. So he's absolutely not going to be exercising his options live, I don't think. If you want to take side bets, hit me up in the comments. I don't think he's going to be doing that. There's a good chance he already sold a bunch of those calls today. They were up over 1,000%. And I hate to break it to you, but Keith Gill is not in it for you or me. Keith Gill is in it for Keith Gill. He's, I don't want it to ruin the whole video, but I think his greed knows no bounds. He had 54 million and he came back for seconds. A lot of people lost money over the last 4 years on GameStop and on AMC, and they cannot even dream of coming back for seconds because that money's gone. Now he's a billionaire, and even he was like 250 million a couple weeks ago, and he came back for thirds because he bought calls and showed his position on Reddit, and that's why we're getting this next spike. So let's just transition that though. Okay, so we have this new spike. We have it 65 in the after hours from like 46 close, I think, 45 close. Really rallied today. It was insane. The after hours is interesting because it's only Robinhood allowing trading after 8 p.m. Eastern. And Robinhood is a dumpster fire. It's garbage. We all know, like, they've shut off the buy button. Right now, they only have a buy button. There's only a buy button. You can only queue orders. You can buy orders. So what does that mean? Okay, people are getting hyped and excited because it keeps going up, okay? The volume will be extremely low, though, okay, because it's one broker. I don't have Robinhood. Canadians don't have Robinhood. Anyone outside of America doesn't have Robinhood. And even a bunch of people in America don't have Robinhood, okay? So you're looking at a microcosm of a specific, very small number of people. People that A, have Robinhood, and B, actually want to buy GameStop at this price. And this price is times 4, okay? I've said it before. You have the Ian guy on Twitter. He's pretty famous on Twitter and on Instagram and on TikTok. And he's reminding people this is times 4. Okay, they did a 1-for-4 dilution. It's actually more like 5. Okay, because they did a stock split of we take 1 and we give you 4, and then they diluted like 2 weeks ago, right? That's why you had that big drop, because they diluted, raised $800 million. Okay, so it's really like times 5 is what you're seeing. So $65 a share would be like $325 a share. That's where we're at right now. We're basically back to what we were in 2020. So if people were holding in 2020, you gotta ask yourself, do you think they're going to hold for higher after it took them 4 years to get back to where it was? My gut tells me no, those people are out. Now, new people who aren't viewing this as they should, as 325 a share, who are viewing it as 60 a share, and it's all over StockTwits. These people, they don't seem to understand this stock diluted, the company diluted. What you're paying now is not the same chunk as what it was 4 years ago. The float was much smaller. This float was 400 to 500% smaller 4 years ago. Okay, it's a fact. One share is not the same as one share. They don't understand that. They might be replacing the people that leave. So you might get a net zero there. You'll have some sellers and you'll have enough buyers to meet them. Okay. So really no bull thesis there and no bear thesis really, because they're kind of going to counter each other. The thing is, a lot of them are riding on the hopes that of this idea that Keith's options that he bought, that there's not enough shares to cover them. Well, newsflash, there's not enough shares to cover pretty much everybody, because the options chain extends all over the place and it extends into the future as well. It's not like June 7th is the end all be all for this stock and the options. If it gets to a point where they need the stock, what do you think B. Riley or JP Morgan, what do you think they're going to do, guys? They're going to, the same thing they did with Bed Bath, the same thing that they did with AMC, the same thing they did with GameStop just 2 weeks ago. They're just going to go to Cohen, they're going to go to the executives of GameStop, and they're going to say, we need some shares, we got to create some shares, we're going to do an equity offering or a private equity offering, an at-the-money market offering. We're going to do some sort of offering, create the shares, and fill up your coffers. GameStop will be better off financially because they burn cash right now. They don't make money. They burned 30% of their cash last quarter, which is an insane amount of cash to be burning in one quarter. Is 30% of all the money you have. Imagine you had a bank account and then in 3 months, your bank account was down to 70%, like down 30% to 70%. Like you had 10 grand and now you only had 7 grand. Like it's a lot of cash burn for one quarter. But they'll just raise the shares. Like they'll just make shares, guys. So I am not in the camp that is getting hyper excited about this because I know they'll just create shares. They did it with AMC relentlessly. And then when the shareholders finally said enough is enough, they made ape without anyone's permission. Maybe they'll make game, I don't know, and just make a token and then dilute the shit out of it, sell it, and then attach it to get. You know what I'm saying? Like there's no ends to the tricks that the hedgies can do. Here's another thing they can do. This is the one I really want to talk about. This is the big problem with the options trading, because I'm interested in options. I'm not interested in the stock. I don't care about the stock. The money to be made is in the options at this point. There's not a lot of upside on the stock. Stock goes from 65 to 100. Okay, you make $35 a share. You buy options. Today they were up 1,100%. They're going to open up like 3,000% tomorrow. Okay, 100 divided by 65. What are we talking here? 40%, 50%? Who cares, right? The money is in the options. So here's the problem: if they, for whatever reason, decide to suspend this ticker, and you have an option with a contract date. Back when the banks collapsed, it was SBNY or SIVB, but I'm pretty positive it was SBNY. People with options were screwed. They expired, and no one was able to exercise because the stock was suspended, and the contract is just a dated contract. It doesn't care if the stock is trading or not. If the company went bankrupt and you had a stock option, it's gone. It's irrelevant. Unless you had a put, then you win. If you had a call, bye-bye. SBNY, it got pretty much delisted, right? It's still around, but it went to 13 cents from $115 to 13 cents. Or I closed my short at 18 cents. But I know people and people on Robinhood. So here we go back to the Robinhood. They got Initially, nothing. They initially had nothing. They were like, we're sorry, what can we do? Even though they're the ones that screwed you because they didn't allow you to exercise. And they said, you know what, we'll give you shares because it cost them nothing. It cost them 13 cents a share. They didn't give a shit. And people took it. They were like, oh, God, thank God I got something instead of nothing. Same thing could happen here. So it'd be bad for calls and it'd be bad for puts. What if they halt this on Keith and F him out of all of his calls? They just F him. They go, something's happening here. So here's the thing, is everybody thinks it's about him or it's about GameStop, when the market might say, no, this is about the integrity of the stock market. We need to halt this pending an investigation for the integrity of the stock market. We don't, we want to make sure there's nothing illegal happening and there hasn't been some kind of weird system or loophole that is creating money laundering or fraud. If they halt it, all options are halted. Puts are halted and calls are halted. If they expire, you could be screwed. This is the dangerous scenario for me that I'm thinking of in my head, because I'm going, man, I don't want to get stuck with thousands of dollars on one side, probably puts, I'm afraid. It's gone parabolic, and it's halted. Okay, but I mean, for bulls, that's, you might want to hear that, because that gives people who want to buy puts some caution. Well, okay, shit, we could get screwed here. But same thing with calls. If you own stock, that would be the safest bet here. So if you short stock, safest bet, and if you buy stock, safest bet. Because if it does get suspended, I'm not talking about halts. Halts are 5 minutes, 15 minutes, 1 hour. I'm talking about a suspension. If it gets suspended, whenever the suspension lifts, you just pick up where it left off, plus or minus whatever the hedge funds decide to do with it. Because when SBNY suspension lifted, it was 18 cents. I closed it immediately. I did not wait. It was 113, got suspended. 2 weeks go by, 2 weeks, 13 cents. So that doesn't mean, when I say you pick up where you left off, it doesn't mean you pick up at 113 or whatever GameStop is. It just means you get an opportunity to stay in that, whatever your position was, remains. An option, it could just be zeroed out of your account and be gone. Stocks, short or long, will be in your account at whatever the price is that day. Sorry, I just had to plug in my phone. So a couple long-term things with GameStop, okay, is, yes, they just raised a bunch of capital, so they should be good for at least 7 quarters. If they just lost money every quarter, they could just go on for 7 quarters. So that's almost 2 years. This is good for them as a company. I noticed that after today's action, all the extended moving averages, they basically doubled. They used to be 17 for an extended moving average. Now it's 35. It was 34. When it opens tomorrow, it's going to be 45. So all zones of support have gone up substantially. This is very good for the bulls. Very bad for the shorts. So if you're looking for some kind of bullish confirmations, I think I've given or provided a lot in this video. But you have to understand, parabolic stocks that rise parabolically fall parabolically. Typically, they don't rise parabolically and then just taper. The only really stock I can think of that has done this is Nvidia. But you have to understand, GameStop is worth $20 billion now. Okay, Nvidia is worth $3,000 billion. Nvidia makes $25 billion revenue. It makes a GameStop in a quarter. It just makes it, financially speaking. That's how powerful and big Nvidia is. The top 7 stocks equate to $15 trillion of the stock market. Those 7 stocks are worth 2,000 shares, companies combined. So GameStop is a speck of dust in the vastness of the stock market. GameStop is not going to collapse the market if this thing starts kicking off. It's not going to do any of that. I know that all the people out there, they think like, okay, hedge funds lost or shorts lost $1 billion. Okay, but how many billions did they make when it went from 400 down to $10? They literally probably made $1 trillion, and then maybe now they lost $2 billion out of the trillion. So they made 1,000 billion, and then they lost two. You know what I mean? Like, who cares? You're not really denting these guys. Citadel, Ken Griffin, everybody hates him. That's in GameStop and AMC. Ken Griffin, for the second year in a row, said this was the most money we've ever made. So 2 years in a row. And it was like more money than his whole, like I don't know how old his company is, but like last year when he said it, he was like, we made more money now than in the entirety of our existence. Because, I mean, look at the markets, guys. It's gone literally parabolic. The market is parabolic. The market, all you got to do is look at headlines. The Dow is at all-time highs. The Qs are at all-time highs. The S&P is at all-time highs. The Nasdaq's at all-time highs. They're literally, they've never been higher in their entire history. So, and kind of like GameStop, right? It's basically back up there. Everyone buying here is buying the exact top. Okay, so, but along the way, all the hedgies have been making money there, where people who just were only focusing on, say, AMC or GameStop memes, it was a complete opposite. They lost most of their money, right? So they have a lot of ammo, is what I'm trying to say. It's not like I don't think they're going bankrupt anytime soon, certainly not from GameStop. Like there is institutional ownership on GameStop, so I guess that is bullish. Keith owns a good percentage. Cohen owns some. People were like, "Oh, it's DRS like 40-50%." No, it's not. It might have been before, and then they diluted. Plus, they did the stock split, right? So, and again, some of those people have probably closed their positions. So you can't just believe everything you read. Please, do yourselves a favor and try to consider both sides of these all the time. Don't be a victim if this thing falls. Don't be a victim and be like, "Oh, I didn't know. Nobody told me." Okay, well, no one needs to tell you. You're an adult, and this is your money, and these are your decisions to be making. And the market is designed to take money from the poors and give it to the rich people. The whole concept is: take it from the poors and give it to the rich. Portnoy ain't your friend. And neither is Keith. They're on another level, and they look out for them, and they're in the business of making money and making money off other people. Keith might come off as your ally or whatever. I'm not buying it myself, totally, unless he wants to become a philanthropist and give everybody a bunch of money. I'll change my opinion at that point. Until then, he's literally just making himself rich. Which, okay, the free country, literally, anyone would wish to be in his shoes. He's so rich at this point in such a short amount of time. I don't buy a stock because I think it's like some kind of patriotic move or anti-establishment or whatever. I don't think that's going to happen. If you have these kind of views, you might want to look at shorting a Chipotle, because they're just getting destroyed on social media. And frankly, I've never eaten there, but the food, like the way it's displayed, all the stations, every video I see, it's always disgusting and not clean. It looks super unsanitary and disgusting. It does not even look good. And the stock is $3,000. It was down $100 the other day. There's other companies. I'm saying, if you're trying to like look at fighting the fight or something like that, ESG companies or oil companies or whatever, right? I don't think the sword to die on would be GameStop. I think really people are literally just in it to make money. You can kind of tell it from the comments on social media. It's the FOMO is back to what it was. I will say that. So, old habits die hard, though. As time passes, people's memories fade. Mine don't. I did make some money on AMC, but I left a lot on the table. And I have people in the Discord that lost a lot of money on AMC. They lost a lot of money on GameStop. They lost a lot of money on Mullen. They lost a lot of money on many of the memes. Okay, so memes are here for a good time. They're not here for a long time, right? That's generally how it goes. I'm very skeptical about GME with Ryan Cohen because of what he did at Bed Bath & Beyond. Bought stock, pumped it, left the company right as they were announcing dilution and bankruptcy. Maybe he was dodging a bullet and it was coincidence, but it was the same with Chewy. Ran it up and then ran it into the ground. It went into the ground. Bed Bath & Beyond literally went bankrupt. 3 strikes, you're out with me, man. Like, now he's in GameStop and he's... I don't trust Cohen. I would trust Kitty more than I would trust Cohen at this point. So please exercise caution. Again, consider some of the things I said about the options. If you're looking at options now and you think like options is some safe game, we gotta look to that. We gotta look to the banking crisis that was only 1 year ago, right? It was last May, where they paused some options. I think the same thing happened to people in MMTLP. Where, they basically just, the ticker vanished. It's just gone, right? Don't for a second think that they don't have ways out. The excuse will always be it's for the integrity of the market. Even though this is a spec, like I said, I'm always like, when I hear Jim Cramer going, investigate GameStop, investigate Roy and Kitty. Bro, you are on your TV channel every day, pumping NVIDIA. You named your dog NVIDIA. I'm not joking. The stock is up $2,750 billion in like 18 months. It's gone parabolic. You're on TV promoting, advertising, advocating. Buy it and own it. Don't trade it. In other words, buy and hold. He's saying buy and hold. He's doing the exact same thing as everyone in this community. That stock is up, like, what's 2,750 divided by 20? 1375? So it's up 13,750% more than GameStop, or whatever, or 137,500%, right? Whatever the math is. And he wants to investigate GameStop. Like, you got to be joking me, okay? That kind of stuff is all over the market in my books. But big money isn't us. Big money will do whatever they want, and big money would definitely take the pores out at their own convenience for the integrity of the market or whatever. So exercise some extreme caution with these trades in the next, or temper your FOMO. I think people that are going to buy this stock, they're going to buy it no matter what I say or what anyone says in this video. Isn't to deter you from buying it if that was what you were thinking. It's purely to inform or sort of give my thoughts and my opinions, since I've been trading for over 20 years. And I have a group, a Discord, and have videos, and have shown a lot of success in the past on my channel, shown a lot of people a lot of things. So it's really just, I'm just putting the info out there. You do whatever the hell you want to do. If you make money or lose money, it doesn't affect me no matter what anyways, right? Unless you make a bunch of money and you want to score me a tip. Like you know what I'm saying? I don't think what I say is relevant in the end to whomever and what they're trading. It's just temper the FOMO, because what you're seeing ain't $65 GameStop. You're seeing you're already at, just pull the chart. Do instead of 1 week, instead of 1 day or 1 week or 1 month or year to date or 1 year, why don't you click 5 years? That puts you back. You'll see the charts, guys. You're like the same. You're at the peak again. What happened? You never got the 1,000. So I don't know, the people now who might say like 100, 200, 1,000, they're not considering market cap. They're not considering the dilutive effects over the last 4 years of the split and the dilution. They're not considering what has changed, that like they will just do more offerings. There is a shelf on the stock already. They can sell more shares. Robinhood has been known to turn off the stocks. So has TD and some of these other brokers. There's this whole lot of new factors that I think a lot of people are just, for whatever reason, completely ignoring or forgetting. That I would say temper the FOMO. Trade with what you're okay losing. No one wants to lose even any money, I don't think. But, losing. I honestly, please just don't YOLO your life savings into this thing. If I stopped someone from making 10, they YOLO'd and they could have made $1 million. Okay, that would suck. And they said, man, you jerk. I could have made this. GameStop went to 1,000, you dumbass, and it was only 65. I'm sorry, okay, if that was the scenario. But there's a very real scenario where that same person YOLOs their life savings and GameStop goes from 65, maybe it pumps in the morning to 70, 75, and they don't sell anyways because they weren't going to sell. And then it dumps to 45. And then it bleeds. And then they dilute. Like AMC, guys, AMC was 78 in the pre-market. Hit 60, went to 40. The price you see right now is divide 10. So if AMC is $6, it's 60 cents. So if you had shares at 78 or 70 at the peak of FOMO, that's at the peak of FOMO, and I feel like we're at the peak of FOMO in GameStop again. If you bought there, you now really only have shares worth 60 cents. Okay? If you YOLO'd in there, you probably had to get a second or third job. And I don't, anybody who watches this, I want them to kind of understand the gravity of some of these decisions and how it could impact you, good or bad. You can play both sides on this, guys. You can go long and you can buy some puts to cover your longs too. You don't even have to just play one side. If you want to buy shares or buy calls, you can also buy some puts. And you don't even have to do it 1 for 1. Okay? You can do like 3 calls and 2 puts. So if the stock were to rise, those calls should outweigh the puts. And if the stock were to fall, if it falls enough, the 2 puts will outweigh all 3 calls. So you don't even necessarily have to be sure which direction it's going at this point because the IV is so high. The only thing you don't want to see here is and you're trading options, is you don't want to see it trade sideways. Maybe tomorrow is a nothing burger, nothing comes of it, and then for 3 weeks the stock just trades around $65. I would suck for options because the options value will just erode on both sides, right? I'll give you one last example before I log off here. Lululemon, every stock, they have earnings. Lululemon popped on earnings. It dropped a little bit on open. Both the calls and the puts were totally wrecked today, guys. It wasn't enough of a move. They were double-digit reds, like 30, 40, 50%, both sides. So this options trading is absolutely full risk on all the time. It's not safe in any capacity. And right now, more than ever, it is a casino. The CBOE knows it. I know that there's going to be these crazy strikes on GameStop tomorrow. I just know. Whenever they add those crazy strikes, almost always those people get blown out. So we'll have to see what happens tomorrow, guys. Good luck to anybody trading this thing. Good luck to myself, too, because I obviously need a piece of the pie. I am looking to go short and hoping to 10x on not short the stock, but on puts. And just during volatility, I think that the bear thesis is very slim to none right now. You are going to require people to sell the stock who want to get out. You're going to require a dilution. You're going to require something negative. And there's really not a lot of that coming out of the pipeline other than when they do earnings, they're probably going to say we did some cash burn. But they raised capital to get them through more cash burn. So there's a very small bear thesis here. It's not a matter of being bearish on GameStop. It's a matter of that parabolic move. I know that all of these stocks, by and large, are computer algorithm controlled.
at the end of the day. You can draw Fibonacci's on most of these, and it will hit exact Fibonacci levels, 23.6%, etc., etc., etc. It'll just hit these exact percentages, regardless of all the inflow or all of the outflow. So I'm just personally looking to capitalize on that volatility and still even go long if it hits areas of support. Okay, and if you're in the Discord, the link is below. If you're not, and it'll be in the comments, pinned in the comments. You'll see me. I'm very neutral in that regard, where I will say, like, here is support, here's where it could go, right? I'm not just, even though if I might have a personal opinion of a stock, I'm still giving other people the information to play whichever position they prefer. I'm not there to tell you you can't buy GameStop or whatever. You do whatever you guys are going to do. I hope you come out profitable. I hope you could all become Keith Gills and become free from it all.